All right, welcome to the weekly Delphian meeting. Thank you for attending. So the agenda today, we're going to go through the market update, and then Shawn's going to take over. He's got some updates on earnings trades, and I think we'll obviously have Q&A too for any issues you guys have out there. So let's get started. So for overall market, we look at, it's been pretty stagnant for a little while here. Everything's in the same: Dow, NASDAQ, Russell still in 2, SPX still in 1. So no change there at all. As far as the overall market pulse, and we'll go into this, but you can see, we were right above 50 and in the green, and we've dropped back down. So that may be an indication of things. We're up in the 40s, not quite oversold, but right near it. 45 is kind of our benchmark, for oversold on state one. So we're up high, but not quite at the threshold. So let's get into the market pulse here. So as far as, we talked about this last week. We had pretty much straight beeline from July 20th, so it's basically a month of run up, and then it, kind of plateaued here at 42, and we dropped, at 41. So not much movement. I guess since we last talked, it kind of plateaued. So, and of course, the 8s are still climbing. So very, very interesting there. If we look down, also the new lows, we had quite a pop. This is the highest, 440 since the pandemic. So that's the highest rating we've had since, back in the March of last year. So that's, these, obviously got up astronomical, but, beforehand we're, before things really went south, we're still, getting up pretty high. You can see there sorry, let me narrow in a little. So, things started to pop up, and then they stayed elevated, the entire time this thing was tanking. So it wasn't, exactly, these things kind of corresponded with the movement down. So, if we have sustained new lows, obviously that's a bad sign for the market overall. What we have been seeing, and, we'll get these little pops, and then, we'll kind of bottom out and then turn around. And that's mostly, if you put in the SMA 50 on this, you would see how that correlates here. So, that's something to be on guard about. Okay, is it just gonna, come back down to the 50 and then turn around? That's what it's been doing over and over. So if we keep these new lows elevated, then I would expect, us to break through that SMA 50. But, it hasn't been doing that. We just get little blips, and then it'll go back to kind of flat line. So that's just something I've been watching. You guys should, keep an eye on that too. But it has been kind of pretty choppy here. And normally we just get a pop and flat line, a big pop and then back to flat line. So it hadn't really gone back to that, like low number in the 40s too much. So it stayed elevated. So something could be on that horizon here. I know it's talked about, after earnings. Am I reversing, Shawn?
Yeah, a little bit. Something's coming back. Yeah, just started.
Yeah, I could hear the reverb. I'm not sure what's going on. I don't know how to fix it, so I'll just plow through it. Hopefully you guys can follow. But obviously, something's building up here. You know, Shook talked about, you know, after earnings, you know, that would be an ideal time. Gonna meet everyone to see if that goes away. Sorry. Trying to get rid of that reverb. I just mute everyone. I didn't mute you, Shawn, so tell me if I'm still doing it.
Sound good.
Yeah, so, you know, the new earnings, you know, we're getting till the tail end of earnings that Shawn will talk about. You know, I think in about a month, we'll put out the next quarterly plan. But usually, you know, this lull after all the earnings is out, you know, that's an opportune time for the market to do, you know, kind of corrections where there's no, you know, profits and things like that driving. Profits driving, you know, the market higher. So there, you know, fairly no news outside of the Fed. You know, obviously that'll be a big thing coming up here at the Fed. So, and what they do with, you know, this seems like persistent inflation, even though they call it transitory. You know, I've noticed prices, I was saying earlier on the call, like 3 pounds of bacon at Walmart went from like 12 to like $17, you know, just seemed like overnight. So a lot of that meat stuff seems to be a lot more expensive. Anyway, so keep your eye on this, the new lows. You know, if we stay elevated, I'd expect things to get, you know, pretty crazy. So let's look at bullish bearish. So we looked at this last week just because it had, you know, I think this is where we were. So we basically, sorry, let me go to this chart. It's a little better. So last week on the Tuesday chart was what we were looking at. So we had ramped straight up, and then, you know, we've leveled off, and now we've crossed right below. So, you know, that doesn't mean the market's rolled over. That just means, you know, we can go choppy back and forth for a little while until the market finds direction. But, you know, that's definitely interesting that it just ran straight up for a month and then plateaued there, you know, at 51 and basically turned around a little bit, and we'll see if it continues. Not sure about that, but definitely interesting charts to look at. Let's look at SPX. This keeps on chugging, new highs. So, you know, last week. So, you know, that one's been, you know, doing very strong. I would say the key, you know, not much we can read off this chart other than it's been really strong out of state 1 above target 3. But we'll, you know, if we look at our normal you know, 1-year chart, whatever, that 50-day SMA. So, you know, if things continue the way they are, you'd expect it to test that SMA 50, which is at, you know, 43.40-ish right now. I think the market's, you know, so we're about 100 points away from that. You know, how things have been going, you know, they just, you know, we run for a while and then we test that 50 and then it bounces. So that would be the thing I'd be looking for here is, okay, we creep down lower, test that 50, and then, you know, kind of watch the other, you know, watching the new lows and see if it if it holds to what it's been doing, which is basically bouncing off that and giving us a good bullish trade there. So that's SPX. NDX, we talked last week, seemed like it was plateauing, you know, right above target 3. So that's been the case since then. So we talked about how it's just been basically sideways and it's continued that. So obviously SPX has made new highs. This one's pretty much, you know, been pretty much sideways for almost a month since, you know, broke those new highs there, the 23rd. So this one's been sideways, and we all know Russell, yeah, for this one, I'd watch that target 3. It seems like that's about the same. If we have a down move, it'd be about the same as that SMA 50 for the SPX. So that's the only thing you can really look at. Can it break below this, or does it keep holding above? That's obviously a bullish sign if it can hold above that target 3. But if it breaks below and holds down there a few days, that's probably a state 2 scenario for NDX. Russell, I think I said this almost 1, 2, 3 weeks ago or something, right after this came in. We talked about how this was going to move sideways. It's pretty much moved exactly sideways. And we're looking at this for which way it's going to break out. We have our low down here, and then our high up here. Pretty much stayed, and I think we talked about this like 3 weeks ago before it shook. Which way is it going to break out? So it's still in the range, well past that time, but I've seen this many times where, state 2 is kind of, like a holding pattern. And that's exactly what it is for the Russell right now. I just, if it can break above and below and hold, that's definitely a good indication of where the market is. This one's been sideways since February. So obviously building a nice channel, sideways channel. So usually when, they break out of one direction or the other, that's kind of a trend direction for a while. So that's what I look for on the Russell. So we got our high here and then our low here. And that's annotated here in this current state low. So like 2100 and 2290, just call it 2300. So you got a 200-point range. See which way it's breaking. But overall, obviously this is your most important indicator. I'd keep following this. Stay bullish until this is broken. If you can see it will dip back down there. But until this thing fails, I would stay bullish overall, and just kind of these dips. That's what we've been talking about a lot. Gets down there, it's a good opportunity to enter trades, and it's worked for a really long time. At some point it will break, but we'll have to wait and see on that. So that's the quick market summary. Open up to comments and questions. I muted everyone, so you have to unmute yourself if you have comments. Nobody?
Quiet
Yep.
group.
All right. Well, I guess the other thing, last week we talked about structuring a new, the new bull call that we're developing. I mean, bull put, excuse me. Oh yeah, just another kind of side note. The studies, obviously, these spreads are doing fantastic this whole year. But I'll do I'm planning on doing that quarterly update. So that spreadsheet that I posted, I'll do another one, after 9/1. So that following week, whatever that is, so it'd be the 8th. I'll have the update. So I'll close it out here and do all the data, and then the next week, the 8th, I'll give you an update on how all the studies are doing. Obviously doing very well. So if anyone's trading them, those spreads are doing real well. So kind of hit or miss on the long calls, but and I think what Sudhir had talked about with this the pie charts. When this green line's going up, trending up, it's good for all trades. When it's not, like kind of like this, it's trending down. Those long calls were not working, but the spreads were still working. So it's just a matter of the spreads won't work when you get massive drops. Like this back in March, where the market tanks, but any kind of like drop, pullback, even these, aren't too bad. It's, you basically get trade alerts down in here after, outside of that breakout, all these other ones are looking for pullback. So it'd be, like things start dropping, you get in, and then, you're out here, that type of thing. So the only time you get hurt is, you get the pullback alerts here, and it keeps on going down for, more than, 60 days type thing. So, it doesn't recover within 60 days, and those spreads are, that's where you're going to lose on those. So, yeah, the other briefly talked about those spreads, and I've been kind of mapping them like I did a LNC, this one here, then versus the bull call. So I've just been tracking how they've been, matching up overall. So definitely interesting, and I'm still learning a little, but if anyone else has been tracking, like that new kind of bull put, I advise that you do that, just kind of get familiar. And if you have feedback on that, just let me know. Otherwise, you just, we'll make decisions on it. But, it seems like a good strategy overall. A lot easier to execute, this bull put than, buying this deep in the money call. So, you're selling out of the money and selling, buying it out of the money put. Seems like it'd be a lot easier to execute. So does anyone have comments or questions about, we talked about that last week? No. So there, are you talking? I couldn't hear you. All right. Well, Shawn, we got a quiet group, so I'll let you go.
All right, cool. Yeah, ready to roll. All right, let me see what I have. So give me 1 second. I'll share my screen. So yeah, I have quite a few things that I want to talk about. So see if we can cover it. I'm just pulling up my screen real quick. These are just the studies from yesterday. So a couple things like Josh mentioned, the earnings plan, the new Q3 2021, a couple weeks to a month or so, we'll be having that out. I've been working on, surmising and trying to get all the data within the virtual portfolio and get all the data together, regarding the Q2 2021 trades for the earnings. So a lot of the bullish pre-runners and bearish pre-runners are completed, just based on the fact that, most of those have had earnings already. I think there's 1 or 2 in there that's still pending. But I did want to kind of show you just the raw results of what I've come up with that thus far, answer any questions you guys might have. And then I'm looking to get the same analysis completed sooner than later on all the other trades as well, and just kind of run it similar to what we've done before, in the previous quarters, and have an analysis sheet so everyone can kind of look at the results based on the virtual portfolio. So, to show what, Josh and I have done previously, excluding, let me see, I got to get some of this out of the way. So when we come up with the plan last quarter, the earnings plan, this is part of the file that Josh had saved on the shared drive. So we can see that, this is for the bullish pre-runner with a 50% for this quarter. And you can see, if we're excluding row 1, going all the way down, you got 54 rows, but exclude 1. So there's 53 symbols that we had set up for the earnings for the bullish pre-runners, 53. So now when I went in there and actually only traded the confirmed trades as it had come out, I have traded, part of my screen's being blocked, so excuse me for a second. Rid of that screen share notification. Is it doing it on my home? 1 second, I'm sorry. So, let me get this out. So when I basically did the analysis and ran through there, all of the trades that I had confirmed based on our earnings plan that were confirmed earnings dates as of the day of the trade, I have over here on the right-hand side. So essentially, I took the one page that Josh constructed that's in yellow with the 53 trades, and then over here on the right, I actually took in and went back and said, okay, give me the confirmed earnings dates and if they had changed from when we previously had sent out the earnings plan, because obviously that was 30 some odd days prior to, or whatever the case may be. And I calculated based on the entry days when we should get into the trade based on the formula that most participants within this group have helped me comprise. So that tells me that for ASML, which was confirmed on the date that we were supposed to get into the bullish pre-runner trade, I should enter the trade on 6/23, and then barring me hitting that 25% profit on the long call trade, I need to be out in 19 days, and I need to be out on the 20th, I think, if the 20th is actually a business day. Let me look. So the 20th was a Tuesday, so I need to be out. The ASML has earnings on 7/21 before market open, so to make sure I bypass getting hit with that earnings announcement, I need to get out the day previous. So I need to make sure I'm out by 7/20. So that's what this here is showing me. So get in 6/23, get out previous to 7/21 if I don't hit my 25% target. So based on that, when I ran through the analysis of all the ones that were confirmed within Delphian, by the time the earnings release should happen based on our bullish pre-runner, I ended up coming up with a total of 19. So 19 out of 53 we had as confirmed. So that's roughly 33% or so. Seems pretty in line with what we have previous quarters, but I can't tell you that specifically because I didn't get those numbers for the previous quarter out there, but I feel it was roughly around that same area as well. So interestingly enough, Joe, Josh, and myself, we've kind of thought that just seems very light, that maybe we haven't run the analysis before. Maybe this hasn't happened in previous quarters as much as it has now because of COVID. We didn't know, or maybe we just weren't really paying attention to it as much because these earnings trades weren't as prolific as it was, a couple years ago or 3 or 4 years ago. So that being said, I sent an email to the SEC, and I basically asked the SEC, do companies have a requirement to specifically state the date of when they're going to release their earnings announcement? And, I think roughly 4 weeks after I sent the email, the Teresa, which was an attorney for the SEC, had come back and said, while some issuers choose to provide the information about earnings release dates to the public, there's no regulation that specifically requires them to do so. So basically, obviously, a company, like Facebook or Amazon, they want you to know when their earnings are because they want to be, in good relations, I guess, with the public to kind of give you that information so you can trade or be ready for that to happen. But again, they're not required to do so. So that leads me to believe that if they want to change the date, they can change the date. If they want to move it up, move it back, whatever, they can do so. A couple things that, we have read is that obviously if, a company has a date scheduled for 7/29, July 29th for their earnings release, and they bump it up, meaning they choose to release their earnings on 7/22, that could possibly lead you to believe that maybe their earnings are really good and they expect to have good earnings. So they want to get those numbers out there and, for the lack of a better word, surprise the market. And then, conversely, if it's supposed to be on 7/22 and they release them and then they change it to 7/29, some people take that as a sign that maybe their earnings are not going to be as good and they're trying to kind of postpone the inevitable and release those bad numbers. So, take that for a grain of salt. I can't confirm nor deny that, but, just getting this from the SEC was at least kind of showing me like, hey, they're not required to do so. So, they do it, as of a good faith type thing and take it for what it is. So I found that interesting, and we're trying to work with, other vendors to see if we can come up with, better data based on those earnings announcements. But, I'm just not sure if it's there. I feel that the data that we get is great. And, when I look at others, some areas they might be better, some areas they might be worse. So it just seems the net result is pretty even. So, we've reviewed the symbols and we've reduced them to, some odd 50 symbols like we've had this quarter for the bullish pre-runners. I think that's great. Again, 19 out of the 53, were confirmed, still a really good number in my mind. If you're looking at a 3-month time frame, 19 trades over 3 months is not a huge number, but some people don't want to be trading a lot either, and I completely understand that. So any questions on any of that thus far, or this email here? Anybody want to speak to anything that they've noticed, seen, know, or otherwise? All right, cool deal. So what I wanted to show is, again, I showed, we have this email where I'm showing you basically the analysis that I've done to make sure we can keep track of which ones we're supposed to get into and out of. I don't know why that date there is skewed, but it was. Let me change that for a second. So what I want to show you is within the virtual portfolio. Well, first, let me show you some of the results as I have them up. So for the bullish pre-runners, I did long calls as we have in the earnings plan. I did the bull call spreads, and then I actually used the new bull put spread that Josh has put out last week. So I did all 3 trade types on those 19 different trades based on the bullish pre-runner trade. So first, to look at the long calls, I essentially have the virtual portfolio within my platform. So let me get over here real quick and show you. It might be better to go this way. If I go into organizer and I go into my VP, if I go into my Q2 2021 bullish pre-runner long calls, we can see that I do have one trade still open. This AMBA is currently losing. It took a big gap down, I think, the other day. That's the one that's open. All the other positions within the virtual portfolio are closed. So these are all my closed positions within the virtual portfolio. So what I did was, as I've shown before, I just hit this export button, and I'm able to export it to an Excel file. So it exports just this page, the closed positions for me. So if I go into this closed positions on the long call, so this page is essentially that same data just in this Excel format. That's too small. So we can see, based on, those 19 trades, one still open. I have 18 trades here. Let me scroll over a little bit. So I have 18 trades here, and we can see the various, specifics on, let's just look at the one I want to show you in more detail in a little bit is this Morgan Stanley. So we can see Morgan Stanley entered the trade 629, got out on 714, and got out for an $8 loss. Did a 4 lot, so we lost $2 per long call, bought the $95 call. The reason we got out on the 14th, as we can see from the other page, is Morgan Stanley somewhere on here. Let me find out where it is. So Morgan Stanley had earnings 7:15 before the market opened. So that means that if I want to bypass the earnings announcement, I have to get out of the trade on 7:14. So based on that, I didn't hit my profit target within the 10 days, 25%. So I had to get out on 7:14. So on the long call, I got out on 7:14, and I took a minimal loss on the trade. So we can see this is the long call. And just to run a quick analysis, I didn't get super detailed on it. That's going to be for the other reports. Again, 14 winning trades, 4 losing trades, and then 1 trade still open. I did an average cost per trade of about $1,200, and you can remember I tried to make sure I kept it at least $1,000 per trade. So average trade $1,273, average cost per trade, excuse me. And all I did was I added up all of my returns, whether they be positive or negative for each trade, and the average return per trade 14.54%. And then I also took in my total cost of all my trades, and then I analyzed that based on the total profit and loss for all the trades. So these 2 numbers here, and that comes with that 16.7% return for those trades. So, a really good result, in my opinion, for the long calls. As we know from what Josh has shown, the S&P keeps kind of running up a little bit. IWM keeps kind of moving sideways. NASDAQ is kind of creeping up as well. So this return seems, I don't know what the market did over that time frame, but it seems pretty good in my opinion, especially based on the amount of capital that, we're looking to put in place. I don't know if somebody was going to comment or not. Any questions or comments on this before I skip to some of the other strategies? All right. And this is just, again, kind of the raw data. I just really did it yesterday, pulled it over, tried to get a good analysis to see if I could kind of give everybody an idea of what was going on. So I did the same thing with the bull call spreads. So similar to the bull call spreads of what we use, you know, within the platform. And we can see similarly, 14 winning trades, it's about the same, 3 losing trades, 2 trades still open. Average cost trades for the bull call spreads a little bit more than the long calls. And that seems pretty fair, excuse me, because we are buying, and we know we're pretty much buying a bull call spread that is in the money. So we're going to pay a little bit more to do that. And then when I just did the average returns like I did on the other one, my average rate of return, when I added them up and divided it by the amount of trades, you know, 9.16%. And then I did also something similar for the bull puts, which is similar to what Josh's strategy was, talking about, you know, essentially selling a put that's at the money and then buying a put for protection at the lower standard deviation, 1 strike above it. We can see here, I want to analyze this trade a little bit further because it's such a massive loss in comparison to the other trades. So I just want to make sure that my option prices, something wasn't wrong there. We haven't received bad data from the provider, but it's a lower price stock, a pretty tight spread, so it's possible, but I do want to look at it. And it is a 15 lot, so really, you know, it's about $120 or so per position. So not massive in the whole scheme of things, but I do want to look at that one a little more in detail. But we can see, you know, we really took a loss on 3 trades. So out of how many other trades I have there total? I think this one was 18 trades completed. So out of the 18, 3 trades are losers. So 15 winners and 3 losers thus far on the bull put spread. So similar to what Josh was speaking about. So, you know, that leads me to some pretty valid points regarding, you know, regarding your strategy selection when you're doing these different trades. You know, we run the back test on the long calls, and we can run the back test on the bull call spreads, and we can run the back test on the bull put spreads and all the other types of trades that are within the platform. But, you know, you want to make sure that you're analyzing other values within there as well. One that sticks out is your probability of profit, which is a pretty good, you know, tool to analyze when you're running these trade simulations within the platform, as well as your Greeks. And Joe's talked about the Greeks before, and we have too. And really to be, you know, to look at your delta and then to really look at your theta in these 2 instances is pretty important. So what I want to show you is on my long call, if I look at that Morgan Stanley on my long call, you can see I lost $8 over the course of that 10 or so trading days. $8 on a 4 lot, so I lost about $2 per position. But if I go into my bull call spread and I look at that Morgan Stanley trade, we can see I actually made a profit on the trade. I actually made a profit of 284 divided by 2, so I made a profit of 142. So, you know, I'm buying a trade that is in the money. You know, if you look to see where Morgan Stanley was when I put the trade on, which was about $90, you know, and I'm buying an $80 call, it's already $10.64 in the money. So, you know, really we've talked about it. As long as the market doesn't take a big drop to the downside, you know, I should break even or make a bit of profit on this trade. And that's where this bull call spread, you know, stands out a little bit more. You can see I made money on the trade. And then looking at this bull put spread, you know, we can see the same thing. I made, you know, I did a 2 lot. I was able to collect $126 profit. So roughly about $63 in profit per position. But still net positive versus my long call, you know, was actually a bit of a loser. The one thing that I noticed was the theta on these positions when I analyzed these positions. So theta really, you know, in my mind, and anybody else can jump in if they want to, but theta in my mind really just shows you as the buyer or seller of options, you know, how much money to kind of expect to possibly lose per day in time decay as time goes by. So as time goes by, after you buy or sell those options, how much money do you stand to, you know, make or gain per day, you know, and that's your theta value. Obviously, different things can change in the market. The stock price can move, the volatility can come in, so that could affect that theta on a daily basis. But at least when you're putting the trade on, kind of gives you an idea of, you know, what to analyze or what to look at, what your expectations could be at that particular point in time. Doesn't mean it's not going to change tomorrow, but at least it kind of gives you an idea of what you're looking at today. So what I want to show you is, so if we look on that, sorry, I keep jumping back and forth. I can actually stay here, I think. Let me see. So these are the long calls. So we can see on Morgan Stanley, I put the trade in on 6/29. So let me go back to 6/29 in the time machine real quick. 6/29. And go into my open positions. We can see Morgan Stanley. We bought 4 of the September $95 calls, and the total value was, $10.52. So, roughly 250 some odd bucks. I have it on another sheet somewhere. I'll show you. But we can look at the delta, which is here, 148. Again, we did a 4 lot, so you want to do 148 divided by 4 to get you your delta per position. And then you can also look at your theta, negative. So I have a negative 38.22. So 38.22 divided by 4 is roughly $9.50 negative. So it's basically telling me that based on this long call that I purchased, if everything stands equal as it is today, I should expect to lose about $9.50 per position per day until I get out of this trade. All other things being equal, right? So I'm going to lose about $38 on this trade per day if Morgan Stanley stays the same or maybe even moves a bit higher, or moves a bit lower. So that's in my mind, that's a pretty bad thing to think about, right? I'm losing money if I get into this position, all else being equal. Now, if I go into my other virtual portfolio, let me pull up that bull call spread. So I'm going into my bull calls now. So Morgan Stanley, bull call spread, again, market's at 90.64. I'm buying the $80 call, selling the $95 call. Look at my theta here. Position theta as a total, 643. Again, I did a 2 lot, so my theta is about 321, 322, positive. So now, all else being equal, I could stand to make $3.22 per day instead of losing, $9.50 per day. Pretty substantial difference between those two trade types. And again, market can change, on a whim tomorrow versus what it's doing today. Direction could completely shift, but at least this kind of gives you some, analyst to, analysis, essentially, or numbers to kind of, look at and possibly make a better decision on. So those are the 2 takeaways that I had, really looking at the different trade designs, looking at the way you can set up a trade, having the same expectation on a particular position in the market, and possibly position yourself, in a better spot to, possibly make money every day versus actually giving some money back every day. One pretty cool thing that I want to show you as well is within the virtual portfolio. If I go to present day and I come in here to my closed positions, I'm not sure if anybody's used this tool before. Josh has shown this a couple times, but if I go to my Morgan Stanley trade here within my virtual portfolio and a closed position, I can click on bull call, and it's relative to a strategy, but it's really, this particular link here is relative to Morgan Stanley. If I click on bull call, it's going to break down that specific trade analysis on that Morgan Stanley trade that I did and the time frame that I actually did the trade in. So it shows you on 6/29, I purchased the $80 call for, if you look at it right there, for $11.63. I sold the $95 call for $2.63, a net debit of $9. And then you can see the progression of the trade as the actual chart of Morgan Stanley moves along in time. So just to reiterate, the green bar here is my $80 call. The red bar here is my $95 call in relative to the price of the stock, Morgan Stanley. And then the chart in the middle is obviously the progression of Morgan Stanley's price throughout the life of this trade. And then here at the end is when earnings was getting ready to happen, so I had to get out of the trade. So it really shows you graphically, as long as the stock doesn't take a big dive to the downside, I should break even or, even maybe make money on this trade. And you can see I was making money as we were moving along here slightly up. When the market started taking a decent dive, or the stock, you can see I started taking a loss on the trade here. But then as the stock started progressing higher, I started making a profit on my trade. You can see this representation in the actual long call portfolio as well. So I want to jump over there and show you the Morgan Stanley as the long call position. So long call, Morgan Stanley, same thing, position analysis. The green bar is my 30 delta call, which conversely aligns up with the one that I saw sold on the bull call spread. So I bought the $95 call for 263, and then you can see the green bar is my option strike price. And you can see the stock price wanted to move higher and try to get to that level, but it just couldn't really do it. And as stock price, as earnings started coming about, I had to get out of the trade. So, on this little down bar here, I had to get out of the position, and I gave back some of my profit and actually took a little bit of a loss on the trade. But you can see graphically that, really stock went sideways, didn't really do much of anything, and I actually lost money on the trade. So yeah. So any questions? I mean, I kind of went through that a bit fast, kind of sporadic, but any questions or comments on that analysis between those two trade setups?
Shawn, Sudhir chatted a question. His audio is not working.
Oh, sorry.
Do you want the summary? You see that?
Yeah, win-loss profit factor. Okay, sorry. So the summary of the win-loss and the profit factor for the long calls, all right, versus the bull calls. All right, cool. So,
hey, Shawn,
yes.
Just before you jump to that review, just maybe to speak to the Greeks, just to touch with the long call trade, and I think the visualization here is very cool, with the green line, but the dynamics of the Greeks, with the long call trade, it's certainly a long Vega trade. So the hope is that, and the stock I think went from maybe 91 to 92 and 5/8 or something like that over the 10-day period. So we were correct in the direction, but we were just a long call. So we had that theta working against us. So that was going to obviously be a negative. But the hope is in a long call position, as you go to expiration, that implied volatility will increase before the news. So, I think basically it was a break-even trade because we were a touch correct with the direction, but the theta loss was offset by the Vega increase going into the earnings announcement. So that's where just, occasionally, and same thing with the spreads, you got the delta. The Vega kind of is less of a factor. It is a factor, but less of one. But just keeping an eye, like you suggested, on that theta number, and then also delta number. I know in the past you've talked about break even. It's not really too relevant with a position, like the long calls, but you can get a sense of how much you may lose with a combination of theta and analyzing that delta as the stock goes up and down, over the life of the trade. So that's all.
Right. Yep. Yeah, perfect. Yeah, thanks, Joe. Yeah, so those are, like Joe mentioned, I mean, those are vastly important, and I see the importance of them as we progress into these trades a little more deeply. Just as, when I first started working with Ashok, I didn't really like that bull call spread setup just because that's not the trade setup that, I traded when I traded commodities. Doesn't mean it wasn't valid. It was just something that I wasn't used to using. So now that I'm using that bull call spread a little bit more, I definitely see the validity in that trade. And that similar analysis goes with the Greeks. I didn't really use them as much before because that wasn't just really what I thought was important. But after speaking to Joe and kind of seeing this analysis within the virtual portfolio and seeing those numbers and putting them to, my thought process and putting them, more in my analysis, you can see the validity of them and how they can help you make a bit of a better decision. Because you have three different trade types. You're obviously two are a debit, one's a credit, and then you can see the difference between those Greek values on those three different trade types, even though those trade types are still, pretty much predicting or wanting the stock to go higher. So you're wanting to save movement out of the stock price, but the trade setups are different, and so are those Greek values, and that's where they can help you, I think, make a better decision. not only that, obviously back testing them and running that analysis within Delphian, that's the biggest part of the tool there, is to be able to use Delphian proficiently and making sure you're back testing those ideas and then running the analysis on those numbers and seeing where those numbers have changed based on the stock price moving. This scenario here, obviously Morgan Stanley sideways to up, but how do those numbers and how do those Greeks react whenever the stock price is going down? That's something that you need to test and be able to view within Delphian, because if you see that and you can see those numbers and how they react to the stock price going down, that just helps you make a better decision in the future. And then when you do see something happen, you're not, caught off guard. You kind of not really expect it, but you kind of know what to expect if it does happen. So yes, Sid here had mentioned, the trades themselves. Again, I'm going to put these in a better order, if you will, and better format for everybody to be able to view. Probably, hopefully next week. It takes a bit of time to do so, but for the bullish pre-runners, I don't have a specific profit factor. I probably have to figure that out. How would I figure that out, Josh? I can do that with just the cost, right? Or not have to do the days, I think, right?
Total profits over total losses.
Yeah, so total profits. So my total profits would be what? So 38.26. I'll do that. Hold on, sorry.
No, total gains. So you'd
right. Yeah, I'm going to take out these other numbers, right?
Yeah. So you sum up
so
those
auto sum this.
4 reds. Yeah.
Yeah. Yeah. So let's do sorry, real quick. I'm messing it all up. So 1 close. All right. And so then we're just going to divide it by, right?
No, your profit's not right. That's your profit, not your total gains. So you have to add that 1404 to the 3826.
Oh, okay, so add those two together. Oh, sorry, I'm messing it all up. So here, I know what you're trying to do. I apologize. Not good on the spot.
It's 5230. You can just type in 5230.
Yeah. Now it's all messing me up. Oh, my num lock is messed up.
There you go.
And then so then you're dividing what? The 5230?
Yeah, divide by 1404.
Come on. Still messing me up. Hold on. It's going to show me a negative number, but we know it's positive. It's just doing negative because it's 1404. So 3.72, right? 3.73.
Right.
So here it's showing a profit factor just based on this of 3.73. But we can see too what you had mentioned, we're looking at a total, if I look here, a total of 18 trades out of the 19, one's still open. So 18 trades, and then we can see 1, 2, 3, 4. So 14 trades were winners, 4 trades were losers, and then we're looking at, 1 trade still open. So that's for the long calls. All of the other strategies were pretty similar. I won't put you guys painfully through that analysis again of me figuring out the profit factors for all of them. But what I will do is I'll have all that on those next sheets that you have available. So again, here we're looking at a total of this 18, I think, right? So a total of 17 trades that have completed. 2 are still open, 14 winning trades and 3 losing trades for the bull call spreads, 3 losers there. And then as far as the bull puts, I think it was pretty similar. Bull puts was a total of, so the bull puts have a total of 18 trades completed. So 15 trades were winners and 3 trades were losers. And again, I still want to look at this TFEM trade a little bit more detail just to see, because I know the stock price after entry, it did go down but it did come back to close to, I think it came back to, current stock price at closing 26.99. So almost right at the option that I sold. So I wouldn't have thought that I would lose that much money, but in that instance I did. So that's kind of how that one played out. Now, one thing I mentioned to Joe earlier, and I mentioned to you guys as well, I was quite surprised. This bull put spread is the trade setup or trade design, like Josh you mentioned previously. I was really surprised that using this type of trade design on a bullish pre-runner trade would have worked. I would have really expected this trade design to be fairly flat in profit, and we can see that when I average out average it out as around 6.9%. But I would have thought I would have been flat, maybe even to negative, with the fact that I'm selling a 60-day spread, at least 60 days on the spread, and I'm getting out within 20 days. I would have thought my trade would have been pretty negligible as a whole, but actually was profitable, which was a bit surprising. But I think that just kind of shows the validity of this trade design and what Josh has been showing, and how it is a similar setup to that bull call spread. One instance that I noticed that in was this Morgan Stanley trade. When I did that bull call spread, I bought the $80 call, sold the 95. Here I actually sold the 95 put and bought the 82.50 put for protection. So pretty similar trade design, except for just the reverse. I mean, the strike selections were pretty spot on, except the trade setup is different because it's a bull call spread versus a bull put spread. But nonetheless, you can see it's pretty similar, like Josh has kind of said in the past. So I hope that answers your questions here. If not, please feel free to reach out to me, and we can look at some of this in further detail as well.
Hey, Shawn, go up to TSEM.
Yeah.
Is there a split on that?
I didn't think so. Not that I'd seen. Not during the life of that trade. It was just kind of an ugly chart after I got into it.
Yeah, if it comes back to that price, there's no way it's.
Yeah, I think the option prices had to be kind of.
Yeah, I'd just
huge. I'm gonna.
Jane,
Yeah, I'm gonna go in the option tables and see if I can figure out a way. There's not really too many other places besides Delphian that you can go and see those historical prices easily. Like toss, I can't. So toss, I can't do it unless I did it previously. So I got to go back and use Delphian to just see if there's some big change in those prices.
Yeah, I just checked that. It doesn't seem right.
Yeah, I agree. So this loss just seems way out of the ordinary for the others. But all right, any questions on these guys? Any questions on kind of these tables or what I went over here with this analysis? Like I said, I'm going to have it formatted better for you guys to be able to run further analysis on there, but I just wanted to show the raw numbers while I had them completed.
Hey, Shawn. Shawn,
Yeah.
It's Lee.
Hey, Lee.
Hey, were the results that you're showing now significantly better than, say, the last earning period or the earning period before? For some reason in my mind, this is a lot more positive, and maybe I've confused something. Do you know what I'm saying?
I do, and I think they were pretty close, right? I think the one quarter at last. These are better.
Yeah.
It's not the one quarter we had we were roughly at like that 20% or something like that, right? Or no?
I don't remember exactly, but I know the last two, 2 quarters ago, I think was bad, like subpar, and then last quarter was okay, and this one's better. It seems like, I mean, the previous year, like they were killing. So I think this is more in line with that. But we had so many trades. It's like you had 150 pre-runners or something insane that you couldn't even track. But
right.
Yeah,
because I just pulled up one. I'm trying to pull up some old files, and one file was for the bullish pre-runners for last quarter, and there were 62 trades that were executed that I have on this one file. So that's 62 versus 19. So a larger number, like you just said. Yeah. I thought I had the results laid out, but I'm trying to find them, Lee. I'm sorry, I can't find them as quick.
I'm
Josh is
just
pretty good
wondering
at.
I'm just wondering what changed, because it seems like at least to me, the market is unsettled as the last 2 quarters, but it seems
Right.
your results are significantly better.
Yeah, yeah. Yeah, and maybe that's just due to the smaller number of trades. I'm not sure. I mean, the market has been kind of pushing a bit up, you know, on that you can see that S&P chart like Josh showed earlier. But we could run some further analysis like that, you know, once I get this all laid out, maybe pull some up. No, I mean, it's good. I think that's what helps us all learn, you know, and helps me learn. And, you know, I mean, we run the data and run the analysis, but like you say, if there looks to be a bit, you know, of an anomaly of why one quarter is better than the other, figuring it out is always crucial, right? Whether it's something due to, you know, volatility in the market, or maybe it's due to a value of these options like this TSEM options. Maybe the values were sent over, you know, incorrectly. So we want to make sure, you know, and that's something that stands out. You know, when I see this value here, I'm like, okay, something just doesn't look right. So let me look in this one a little bit differently. And the same with what you're mentioning, right? If one quarter we show we, you know, broke even, and the next quarter we made, you know, 20%, we're like, well, all right, well, why did that happen, right? What made that big of a change, you know, because that's a decent change to look at and try to figure out. And there might be a good answer to it, and there might not be. I haven't had a chance to look at it yet, though, specifically. So.
All right, thank you.
Sorry. I'll try to look at it, though, and see. That I can't find the sheet. I'm trying to find the sheet that I have all of my data on there, but I can't find it really. Well, here's one of them. Let's see. So 2021 bullish pre-runners. So there you go, right? So that's the bullish pre-runners for Q1 2021. And we're looking at, you know, barely squeaking out a profit factor there of 1.11 and a 53% win rate. Whereas, you know, this one we're talking about, you know, almost a profit factor of 3.72 or something like that, right? Here we were talking about 62 trades, whereas now we're talking about 19. So that might, you know, that selection process might have helped, and I hope it did. But you know, lower, not the 19, obviously, because we didn't control that. That was just based on confirmed and non-confirmed. But controlling that total list of trades, you know, down from one, you know, whatever this was, like 130 something to roughly, you know, 54. So maybe that helped us kind of pull some of those bad trades out. I'm not sure. I'd have to look.
Yeah, Lee, the only thing that really changed for the bullish pre-runners was, you know, we did the testing so that they had to hit a 50% profit target. Even though we're still, you know, trading for a 25%, they had to hit that, you know, 50% in testing in a high probability. So that really whittled down the number and really, like, I guess, you know, honed in on the entry day that, you know, works best. You know, because in the past we had, like, you know, like Apple had like 8 different, you know, days that were profitable for 25%, you know, but when you go into the 50, you know, there's only 2, right? So, and it, you know, so things like that, you know, just made it seem like a lot more clear. But that, I think that 50%, and, you know, we'll just have to see quarter over quarter, but it looks like it's a drastic improvement over the last one. So
yeah, that's what I was thinking. So
yeah,
good.
and I mean, based on, yeah, the thing, and looking at that, I mean, that it definitely shows that, right? When you're looking at the Q1 1.11 profit factor versus 3.17 or 3.72, whatever it was. But yeah, that's a good point what Josh said, right? Because when he ran that for these bullish pre-runners, you know, he's using these trades hitting a 50% target profit on the back test. So they had to hit 50% profit on the back test, but we're still only looking to get 25%, you know, as a minimum on our, you know, trade execution. So I think that gives you a bit more cushion, and possibly, you know, those are trades typically you would want to be a little more aggressive with if they hit that 50% profit target. But I think the way Josh used that analysis is much better than wanting to be more aggressive. It's wanting to stay, you know, the same, but find those stocks that you could be more aggressive with, but still want to kind of keep that, you know, profit target of 25%, which is obviously a great profit target, no matter, you know, what you're looking at when you're talking about, you know, taking money off the table in the market. So
Yeah, and if you look at the profit, the days in trade are very small for these kind of percentages that you're hitting. So,
Mm-hmm.
That profit loss per day is going to be, I think that's another metric we can put in there. And then, Bob's favorite, the return on risk per day. I think that'd cut through everything, so.
All right.
Very good, thank you.
I can show you how to calculate them, Shawn, it's easy.
Right. Yeah, I'm not gonna do it right now. I don't want to.
No.
Make me nervous trying to do it in front of everybody.
Yeah.
Makes me nervous. Everybody makes me nervous when I'm trying to do that. I'm just kidding. So any other questions on that stuff? Like I said, I know I went through it fast, but feel free, email me or anything if you have any questions, and we can get into some further details if we need to. But plan to have that out, within, sooner than later. So. All right. Well, if there's no questions, there's one trade that I want to mention real quick. We always go over time, about 10 minutes. I just think I like to talk. But NVIDIA. So NVIDIA has earnings tonight. Dave might want to chime in on this one in a little bit, but keep it short, Dave, if you do. NVIDIA has earnings tonight. Huh?
He's not on the call.
Okay, good. He will keep it real short then. So NVIDIA has earnings tonight. They come up on our list as a non-mover. So non-mover here. This was the file that we shared. NVIDIA, non-mover. We're looking at 80% win rate as a non-mover, 7.85 profit factor. So a couple ideas. We've talked about this trade as our normal, iron butterfly type trade. We've also talked about this trade as being a double calendar type trade setup as well. So if it's possible, I would like for, if you're not trading it live, or if you are trading it live today, I would like for you to test both of those strategies within the virtual portfolio within Delphian. So put this NVIDIA trade in a virtual portfolio and use it as a test for the iron butterfly trade. If you have time to use it as the double calendar, that would be great as well. Sudhir had traded the double calendar. I talked to everyone about, I think he did that on Moderna last week or the week previously and had some pretty good results from that. So NVIDIA is a similar setup. NVIDIA has a pretty decent expected move, I think of about 15 bucks when you're looking at the options for next week's expiration. And then the double calendar trade is costing around $2 as a debit. So if you wanted to do a trade like that, the debit on that trade is about $2, $2.50. So fairly low risk and the type of reward that you can get from that double calendar. But again, those are trades that if you're not experienced using them, putting them within the virtual portfolio is definitely the best way to learn and see how those trades react based on the market and the market movement. So, I think it would behoove everyone if you could do that. It's not that difficult. I'll take a minute and kind of show you real quick. Let me go to current day, go into my virtual portfolio, which is already there. I think I have a portfolio set up here, double calendar. So for NVIDIA, again, I would have to make some adjustments to the prices here tonight, but we can see if I add a position in a virtual portfolio, if I do NVIDIA, and we can remember that NVIDIA within the virtual portfolio, we don't have them set up as the same as a put and a call together. We have a long call calendar spread and a long put calendar spread. So if I go to long call calendar spread, I'm going to say I want to sell this week's expiration and then buy next week's expiration. Stock currently right now is 194, but let's say 195 to keep it even. I'll do a 195, and we can see the debit for this trade is selling this week's expiration, buying next week's expiration, same strikes, debit of 113. So let me just add a couple of these values in here real quick. Oh, sorry. 100% of max profit. I'm just putting these in there real quick. Max risk, create. So I have the call side done. Now I just have to do the put side, add position. I'm going to do the same thing, NVIDIA. I did the long call calendar spread. Now I'm going to do the long put calendar spread. I'm going to use, so selling this week's again, selling this week's, buying next week's, again, stock price around 195, debit of 114. So I'm going to put these values in the same. So that being said, right, the total cost of this trade is a debit, and the total cost of this trade as a debit, when you're adding the put side and the call side together, the total debit is around $227. So, you know, just like any debit trade, when you're buying it, you're wanting the value of these to go up. So I would anticipate that as long as NVIDIA stays within that expected move and the stock price doesn't move, you know, huge to the upside or to the downside, the value of this trade as a whole should increase. You know, these values, again, are taking the closing values for yesterday's options. So I would want to make some adjustments based on any movement that the stock had today prior to the close. So I would have to adjust these prices a little bit depending on what they were, you know, prior to the close today. But this kind of gives you an idea of, you know, of how that trade setup should be. You know, again, kind of fast. We went over this a couple times in the past, but any questions on how that trade design works? Yes. So here I mentioned that I used 100% on this example. That is definitely way too aggressive. You know, I think Sid here would have made 100% on his Moderna. I think he did pretty well on it. But yeah, typically on these, I would stick to the 25% profit. I haven't tested them enough to get a good analysis on where my profit potential is going to be the best. But you know, I think depending on where it opens up at, you'll be able to see, you know, kind of the thing move, and that's where the testing and running it in this analysis will give you a better idea of kind of how those, that specific profit potential number should be. You know, on a trade like this, you know, you're risking 227, 228 bucks or so is the debit. So thoughts, comments, questions, anybody?
Shawn, the stock's 193.85, so it hasn't changed that much.
Right. Yeah, down like 70 cents or so right now. So it hasn't changed too much, you know, from yesterday. I think this exact trade right here I have on another simulator, and it's around 228 as it stands right now. And that's probably because of the implied volatility on some of those options. But I mean, you know, that's actually the same, right? I mean, you can actually see 228 here. But yeah, 230 is what it's showing now. And again, remember, anytime you're looking at the value of options on a trade, a long call, long put, pretty easy to see where the bid-ask spread is on that trade, right? You kind of get an idea of what it should be worth. Now, when you're doing a bull call spread, a little more difficult because you're taking two options and you got to take the bid-ask spread for both of those options, try to figure it out. Three-legged trade, a little more difficult. Four-legged trade like this, somewhat difficult, right? Because I'm showing 230, although, you know, maybe three of my options have traded in this group, but maybe one hasn't for whatever reason. These trades, these strikes are at the money, so they all, in theory, should have traded, right? But maybe not. So if three trade and one don't, that could really skew the bid-ask spread, you know, of the trade as a whole. So always just, you know, kind of look at it, and if something, you know, if you paid $220 for this trade, and next thing you know, it's worth $700, you know, try to say, hey, well, what's going on? Why did it change? Just like, you know, Lee said with the analysis for the results, right? If something looks askew, you know, dig in there a little bit further to try to say, hey, what's going on, and make sure you kind of know where it's at. So, but yeah, the serious question, I don't know the exact profit potential on these trades. 25% seems like a pretty good base, but, you know, like Sudhir mentioned, I think to me last week, you know, he made a little more money on the Moderna because it did spike up pretty, and the stock didn't spike up, but the value of the trade spiked up pretty quickly. He was able to get out for a nice profit. I was able to do so as well, but I just wanted to show this. So please, you know, just track the NVIDIA trade, Iron Butterfly, in your virtual portfolio here. Track this trade as a double calendar if you can. If you can't, I completely understand. Again, feel free to reach out to me and I'll help you do so. But, you know, this is going to be the best way to learn, make yourself more comfortable, and get accustomed to being able to do some of these trades. I think this trade setup here is very viable, especially in a stock like NVIDIA or something like that, where when you're trading the Iron Butterfly, my risk is around $600. So my risk is a little high. I could do one of these and risk 200 and something. a little bit more manageable, in my opinion. Depends on obviously your risk tolerance, but that's kind of how I'm looking at some of these as well. So questions, comments? If none, I'm gonna let Josh take it over and we can all be out of here. All right, no questions. And then, you know, we did get a options, like an options calculator or like an options tool where you can do analysis on different options regarding the Greeks and some of the values and things like that. So once I check that out, I'll be sharing that with everybody. It's from the OIC, so it's a great tool to use. I haven't used that one specifically, but I have used them before, and they do offer some really great analysis to be able to look at options and the individual Greeks on the options, as long as, you know, as well as different valid points within those options. So, you know, if everything looks good there, I'll be sharing that with everybody too via email, so you'll have that. So cool. Thanks, Josh.
All right. Well, thank you, everyone. We'll be back here same time next week. So thank you all for attending and have a great rest of your day.